Welcome to Seacoast Real Estate Academy. Today in our math tutorial series, we will be reviewing common closing statement details to prepare us for completing a CD from start to finish. The closing statement is a detailed accounting of each party's debits and credits in a real estate settlement. In North Carolina, the closing attorney prepares the closing statement, either the HUD-1 or the closing disclosure. Of note, the North Carolina Real Estate Commission holds brokers responsible for the accuracy of information they have reasonable access to for all closing statements. A debit is an amount owed, and a credit is an amount received. Debit to buyer increases the amount of money the buyer must bring to closing. Credit to buyer decreases the amount of money the buyer must bring to closing. Debit to seller decreases the amount of money the seller takes from the closing. Credit to seller increases the amount of money the seller takes from the closing. Closing statements may include single entry items and double entry items. Single entry items are when one party either has a debit charge or a credit. Here's a list of common buyer single entry items. Now here's a list of common seller single entry items. Double entry items are when one party has a debit or charge and the other has a credit. There is the possibility of a double debit where both parties are being charged. An example would be when property taxes are due after September 1st and both parties pay their share. When one party has a debit and the other has a credit, the amounts will always be the same. Prorations on the closing statement items are prorated between the buyer and the seller at closing to make the transaction fair. Remember to never prorate the following items: tax reserve balance, security deposits, and mortgage payment due for the month of settlement. The following are typically prorated items: current year's real property taxes, interest on an assumed loan, rent, and HOA dues. The total bill divided by the total days multiplied by the days owned equals the prorated dollar amount. Remember, items to be paid later in the year or paid in arrears will be a seller debit, buyer credit. Items paid in advance, already paid, will be a seller credit, buyer debit. If you like this video, feel free to share it with a friend. For more real estate education content, please subscribe to the channel. From all of us at Seacoast Real Estate Academy, thank you for watching.